Adobe Stock, and we're talking about Adobe Stock because they've just released earnings, and because of the earnings, this kind of dragged the stock down about 5% on the day, and this was all to do with what they reported in the guidance cut. In today's video, we're going to talk about the earnings itself, we'll talk about the fundamentals of the company, and if I'll be buying any shares into the company, or if I recommend this company as a buy, or probably not a buy right now. I am a big fan of Adobe, and whenever we talk about these stocks, guys, if you don't know, it's all about a long-term hold. So I'm kind of talking from today, how's Adobe going to do in like a year, 2 years time, maybe even longer. It's not a day trading kind of video, so all this is doing from a long-term point of view overall, and I'm a big fan of Adobe, and I currently don't have a position in Adobe. So what we'll do now is we'll get stuck into the earnings and have a look what went on. Adobe for the 3 months ended March the 1st, the company financial first quarter. Adobe reported record revenue of 2.6 billion on earnings of 1.71 per share, topping analysts polled by FactSet, who were expecting revenue of 2.55 billion and a bottom line of 1.62 per share. So you can see there, guys, that the revenue was beat and the EPS was beat. The San Jose-based company expects to generate revenue of 2.7 billion in the current quarter, which ends in June, yielding earnings of 1.77 per share. Analysts polled by FactSet were expecting the company to report revenue of 2.72 billion on earnings of 1.88 per share. So looking at that, guys, we see that the actual revenue side of it, the EPS side of it, of the guide on the earnings report was beat. It was the guidance, and the guidance is what sent this company down 5%. Now, we talk about this all the time, guys. When it doesn't really matter too much what the company actually reports. If the guidance is a big thing on this first quarter, and if a company, what we've seen with a lot of other companies is when they report that guidance, if they're cutting it, which a lot of companies have done recently, then that's what sends the stock down. If a company is going to say good guidance, then we get a bit of a strong movement, especially on this Q1 or Q4, which kind of tells you how the company's going to do for the rest of the year. So that kind of either causes the stocks to go down or go up after earnings, and obviously with Adobe, especially being like a growth stock as well, and saying its guidance is getting cut, then obviously that's what sent the stock down from there. But Adobe itself, when we look at the fundamentals of the company, obviously the PE is very high. It's a 50 PE, which even though it has a good EPS and sales side of it, it's quite a high PE right now. The EPS is down, is 23% growth, and that's for the next year. Sales is 16.9%. So when we look at the actual EPS and sales side of it, it's a really strong company. The P is slightly worrying overall, but the company itself, I really love Adobe. It's one of those like Microsoft where they kind of just sold the packaging of the softwares that they use, and they've kind of now gone to that monthly subscription fee where you get all these softwares that they use, but you pay monthly, and that's made a massive difference to Adobe right now. And also they're very keen at buying a lot of companies out right now just to keep that EPS and sales side to keep growing. They are trying to get into that 20% sales side of it. That's what they've stated before. So from a good investor's point of view, this company isn't settling for this. They're trying to keep expanding it overall. And I like Adobe. It's a strong company in its sector, the strongest company in its sector, in fact. And the only thing that puts me off is that 50 PE. Even at a forward PE of 30, it's slightly high. When we look at Microsoft, they trade at near the same PE, but their PE is a lot lower. Forward PE is a lot lower than what Adobe is. So I like the stock. It's at a discount, and if you're looking to get into Adobe, it's a good discount to get on. Personally, I'd like to get it more towards the low 200 range. But if I was to rate Adobe, if I said, in a year's time, in 2 years' time, is this stock going to be down what it is now? Is it going to be up? It's definitely going to be up, guys. It'll be a $300 stock probably by the end of the year. But for me, it's just a bit a bit expensive right now. I was going to say overvalued, but it's probably a little bit expensive for me. So, great company. I do recommend it as a buy. Over the long term, this stock will go up. It's just slightly at an expensive price for me that puts me off. But I'm a big fan of the company. I'm a big fan of the stock overall, and I don't blame you for getting into it. I just would like to get into it cheaper if I was going to get into it. In the long term, guys. When we look at over that Christmas period where all the stocks got absolutely killed off, and this was down to the 200 range. That's where I look at getting into. But obviously I was busy buying other stocks. But Adobe, great company, and yeah, I rate it as a buy. Just a little bit expensive for me, but a great discount right now if you were looking to get into Adobe. At the moment, that's it today, guys. I'm going to be talking about a couple of stocks that I recently invested in over this week because I've been buying a lot of stocks. So make sure you check in for them videos. Give the video a like, subscribe. I hope this helped you if you were looking into Adobe stock, and I'll see you in the next video.